Hello, good evening.
Hello, bro.
Good evening. Can you hear me?
I can hear you.
Yeah, good evening. So, good evening to you all. It's your boy Jasper. I welcome you all to my YouTube channel once again. To those of you who missed our previous class, kindly go and watch our previous video. It's basically on risk management slash risk reward ratio. So we'll continue from there
Risk
tonight.
management.
Yeah, so we'll continue from there tonight. We'll look at
Okay.
sessions, fundamental, multi-time frame analysis, break and retest, slash fake out, trend lines, support and resistance, demand and
Yes.
so when we say sessions, we have a lot of sessions out there. We have Asian session, we have Tokyo session, we have Sydney session, London,
Resistance, demand and supply.
we have London session, we have New York session. Okay, I'm still on session now. We have Tokyo session, London, New York, Sydney, and so on and so forth. So we have the most important sessions are London sessions and New York session because those two sessions are quite volatile and New York session is more volatile. Why? Because of the overlapping of the London session and the New York session. So New York session is highly volatile.
Timing.
Yeah. So when we say so the next one is fundamental. When we say fundamental simply means news. Fundamental simply means news. And how do we get all the full details concerning news? All we have to do is we need to go to forestfactory.com or we can go to my forestfactory.com or what is it called? My FS book. So this is forestfactory.com. It will show you the series of news for today and every other day. As you can see, today is Tuesday. We have series of news here, GBP, JPY, AUD, and so on and so forth.
Good.
Okay, so that is that on fundamental. So and the next one on the list here is multi-time frame analysis. When we say multi-time frame analysis, it simply means analyzing from higher time frame. This is monthly. This is my monthly time frame. So multi-time frame analysis simply means analyzing all the way from monthly, you go to weekly, then from weekly you go to daily, then from daily you go to H4, from H4 you go to H1, from H1 you go to M30, 30 minutes, from 30 minutes you go to 15 minutes, from 15 minutes you go to 5 minutes. That is simple multi-time frame analysis. So
Yes.
now, let's move to break and retest slash fake out, trend lines, support and resistance, demand and supply. So I'm going to treat the four of these at the same time. Okay. So now I'll just go to my charts and I'll adjust. So now, first of all, let us look at support and resistance. So when we say support is a level where price buy off. Support is a level where price buy off, while resistance is a level where price sell off. It means on our resistance level, we always look out for a selling opportunity. This is my resistance here, and this is my support. On our support level, we always look out for a buying opportunity. Another name for support is called floor. Another name for resistance is called ceiling or roof. So, meaning on our supportive level, we should look out for what? A buying opportunity. Sorry about that. And on our resistance level, we should do what? We should look out for what? A selling opportunity. Price we buy off on our
Definitely.
price we buy off on our supportive level and sell off on our resistance level. I think that is that. So now concerning the break and retest strategy slash fake out, we talk about the break and retest first. And meanwhile, we have what we call channel. A channel comprises of what? a resistance, and a support. It means the whole of this is called what? A channel. So in a situation where price moves in between this channel, price will not stay in this channel for a long period of time. Price will buy on the support, sell at the resistance, buy, sell for a short period of time. Then at the end of the day, price will do what? Price will break out of this channel,
Yeah.
yeah, to test another zone. So in a situation where price breaks out of this channel, this right here is called what? A breakout. This is called breakout. Yeah. So in a situation whereby price came back to test this area here that was previously acting as our resistance, and price started creating a buying opportunity, then this level will then become our new acting support.
Support.
Yeah. This will no longer be our resistance. It will now be our new acting support. But
Support.
yeah, support. But meanwhile, our resistance, our new acting resistance will be somewhere above it. I hope you understand.
Yeah.
So our new acting resistance will be somewhere above it. So this is the case of break and retest strategy. Let me come again. This level right here is known as what? Our support. This level right was previously known as our resistance. So price buys off on the support zone, sell at the resistance, buy, sell, buy. So immediately price break out of this level right here, which was previously called our resistance, and price came back to test this level that was previously acting as our resistance, and now price started creating a buying opportunity, and price buys off. So this level will no longer be called our resistance. It will now be called what? Our support, because
Support.
price has already broken out and it came back to test. So meanwhile, our new acting resistance will be above it. So that is how support and resistance, breakout and retest strategy works. So now let us take a look at fake out. When we say fake out is more like breakout as well. But the difference is when price breaks and a fake out, instead of it to create a new level, instead it will bounce back inside that same channel. So let's assume price breaks out of this channel now. Price breaks out of this channel. So we were expecting price to come back and test this area to be our new acting support, but instead price came back inside this channel. As a result of this, this is called, what really happened here, we do call it a fake out. Yeah, a fake out, because instead of price to come back and retest and then buys off to make this level right here our new acting support, price bounce back into the channel. So this is called a what? A fake out. I hope you understand, bro. Hello?
Yeah.
I hope you understand.
I'm here. I'm with you.
Yeah. So this simply means
I'm with you. I'm with you.
simply means what? A fake out. So the next on the line now is
Because
we have let's take a look at demand and supply, then we'll look at trend line. So let's look at demand and supply. So when we say demand is a major zone where price buys off, while supply is a major zone where price sell off.
you know,
So this level is known to be what? Our demand, while this level is known to be our what? Our supply. So if you are following me well, you observe that on demand and supply, we buy and sell, and on support and resistance, we also buy and sell. The difference between support resistance, demand and supply, support resistance and demand and supply is on demand and supply zone, price tends not to break it quite easily. Like what I'm trying to say is on demand and supply, we call those level major. That is, this is no ordinary support. It is called major. And whenever you include the major, it will then be called our demand. So our demand is usually a major zone where price buy off. Why our supply is called a major zone where price sell off. Meanwhile, support and resistance are called minor zones. They are minor zones because price can easily break and retest support, but it takes a lot of time, it takes a lot of candlesticks before price will be able to break a demand and supply zone. I hope you understand. So, meaning we have this level right is known to be what is called our channel. It's called a channel. It's called a channel. We have our supply zone here. We have our demand zone here. So, in a situation whereby price start creating series of support and resistance in between. Hold on, please. In a situation whereby price start creating series of support and resistance. Let me change this color. So in a situation where price start creating series of support and resistance, hold, hold, hold. Okay. So let's assume price came to this support level. Price price respect it and price buys off. Price came back to this our major supply. Price respect it as well. Price came back down. Price broke out of this support. I hope you are following me, bro. Price broke out of this support and came back to create another new supportive level here. And meanwhile, price came back and returns this level to be called what? Our new acting resistance. So price moved again, came back to test this level, came back to test this level, to test this level, came back to test this level. So what I'm trying to say is all this level here, all of these are called minor zones. They are called minor support and resistance, and it can easily be broken. Yeah, it can easily be broken. Unlike this unlike this demand and supply, whereby it takes a lot of candlesticks before price will finally break out of these zones. So that is the difference between demand supply and support resistance. I hope you understand.
Yeah.
So now we'll look at trend line. So uh, market moves in three major direction. We have uh we have the uptrend, we have the downtrend, and we have the sideways. Okay, so so let's take the uptrend first. So when we say uptrend, uptrend simply means price creating series of higher highs, higher low, higher highs, higher lows. So if you take a look at this, we see now that the major direction here is called what? An uptrend market. So this level right here is called low. This level here is called high. This level here is called higher low because this low is higher than the previous low. So that is why it's called higher low. Why this level
Right.
here is called our higher high? It is called our higher high because this level right here is higher than what? The previous high. And same thing repeat itself here. Higher high, higher low, higher high, higher low. So when you connect this, 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 and this, it becomes what? A trend. This, and it becomes what? A trend. So this is an uptrend market. And in an uptrend market, we always look out for what? A buying opportunity. We look out for only a buying opportunity. And how do we look out for a buying opportunity here? We wait for price to create what we call higher low. We always wait for price at the higher low, wait for price to create a low before we do what, before we look out for a buying opportunity. So this is how an uptrend market works. Okay, so don't worry, in my next video I'm still going to give a full details concerning everything, one after the other. One after the other, I'll be looking at risk management, one after the other, session, fundamental, support and resistance, and so on and so forth. Okay, so now this is an uptrend market. We only buy in an uptrend market. I hope you understand this now. So we'll move to sell. Hello, are you there? He's not there, but I believe he's going to join. And if he doesn't, hello, are you still there? No, I think he's having network issues. Anyways, we'll continue.
I'm here.
Okay, so I hope you understand this one that I just did here, this uptrend movement. So now
I'm here.
we'll move to downtrend. So downtrend movement is a situation where price creates series of lower lows and lower highs. At the end of the day, we see price pointing downward. We see price pointing downward. So whenever price is trending down, price tends to create series of lower lows and lower highs. So this is a downtrend market. In a downtrend market, price creates series of lower lows and lower highs. So this level right here is called our high, while this level right here is called our low. And this level right here is called our what? Our higher low, because this level,
Look,
you said what?
is I.
I mean, this is called high. This is called
Exactly. Low.
this is called lower high. Sorry, this is called lower high. This is called lower low. I hope you understand. This is called high. This is called low. This is called
Low. Lower
lower
I.
high, because this
Yeah.
low is lower than the previous high. So that is
Low.
why it's called lower high. Or do you want me to label it? Let me put it there. Okay, test. We have this level to be called our high. And we have this level to be called our low. Have this level to be called our lower high. And we have this level to be called our lower low. I hope you understand now, bro. So this level is called our high. This level is called our low. This level is called our lower high, because this high is lower than the previous high. So at this level right is called our lower low, because this low is lower than our previous low. So the same thing repeat itself over and over and over again. So this level will be called our lower low. This level will be called our lower low as well. So when we connect everything all together, it becomes what we call a downtrend market. It becomes what we call a downtrend market. So in a downtrend market, we always look out for what? A selling opportunity at the lower high. This is where we normally look out for our selling opportunity at the lower high. So when price gets to the lower high in a downtrend market, price tends to what? Price tends to sell. I hope you understand what I just did now, like this downtrend market.
Yeah.
Yeah. So, or do you need me to label this as well? This is called low. This is called high. This is called higher low, higher high, higher low,
I.
higher high, higher low, higher high.
I.
So now, the third one is called sideways market or a ranging market. Sideways market or a ranging market. So in a sideways market, price doesn't have a particular direction. In a ranging market, price tends to move like this. So this is called a ranging market or a sideways market or a consolidation market. Okay, so in this type of market, all we have to do is stay away from such markets. Okay, all we have to do is stay away from such market, and we'll wait for what we call a break and retest. A break
Yes.
and retest. So whenever price breaks out, we'll wait for the retest before we know what to do. Maybe we'll be buying,
To do.
or we'll be selling. It depends on what the market actually gives us. I hope you understand this as well.
Exactly.
Okay, let me try to show you one or two things on the chart concerning the trend lines. Okay. Meanwhile, if we take a look at this, bro, we see we have a trend here. We have a trend. See, when you connect this, this, and this together, and you connect this, and this together, it becomes what we call a
Okay.
trend. It becomes a trend. It becomes an uptrend market.
Uptrend.
So this is low. This is our low. This is our low.
Yeah.
This is our high. This is called our lower low, and this is called our what? Our higher high.
Our.
This is called our higher low. So this is called low, high, higher low,
Low.
higher high, higher low,
High. Low.
higher high, and higher low. So in an uptrend market, price will create series of higher highs and higher lows. I hope you understand now.
Yeah.
So if I should do it this way, you see now that is not different from what I just said earlier on. That in an uptrend market, price will create what we call higher highs and higher lows. So same thing is applicable on downtrend market as well. So in a downtrend market, price will create what we call series of lower lows and lower highs. But in the ranging market, price will be fishy, and it is expected of us to stay away from such markets. So instead, we need to wait for what we call a break and retest, maybe at the top or at the bottom, to finally get a direction. Okay. So, but we call it a night. I hope you find this educative enough. Okay. So,
Yes.
in my next video, or in our next video, we'll break everything down one after the other. All right. So, good night.
All right.
Thank you.
Good night. Thank you.